It gives that investor the opportunity to take on a new investment that cannot wait for a traditional lender. Hi, business owners. I would love to be able to give you a little bit of insights on the different types of commercial loans that there is out there for your business. There is two different categories also. There is real estate commercial loans and there is non-real estate commercial loans for different types of businesses. So let's talk about the differences. The real estate commercial loans. Those type of loans are for investors that are looking to buy a fix and flip, multifamily, single family for like Airbnb or just regular rentals. There's also loans when you own a property free and clear and you want to take out the equity so that you could go and buy another investments. There are so many different types of real estate loans that for new beginners, for experienced investors, there's many different types of commercial loans that will help you be able to scale your portfolio. So reach out and I will give you more information based on the real estate side. Now let's talk about the regular commercial loans for regular businesses that have nothing to do with real estate. And we're talking about restaurants, salons, truck drivers, any kind of business that you own. We are able to help you obtain different types of loans depending on the situation that your business is at the moment. For example, there's a lot of businesses that need that bridge loan for them to be able to expand or scale their business, and they have either an invoice that they're waiting on product and they need the money to buy it. That's called factoring. We can also give you a loan to buy out a partner if you need to buy heavy equipment or even light equipment for your business. There is so many different types of businesses that small to medium-sized business owners don't know that are out there and that they exist to be able to help you scale your business. So reach out and I would love to be able to give you more information specifically for your needs. So when you are seeking for a commercial loan for your business, it's very important that you understand your financial situation, the business status, where you're at the moment when you're getting that loan, so that you're able to position yourself financially in a good spot. So for example, there's many loans out there that are very high interest. You're paying daily, and that might put your business into a financial crisis instead of helping you increase or scale the business model that you're looking for. So it's very important that you work with the correct financial advisor or a agent that is going to help you connect that correct loan for the situation that you're in at the moment. So it's, like everything in life, today you're here and tomorrow you could be here or here. So making sure that you understand the full outline of what you need so that when you go get that commercial loan, it fits your business model and that you are able to succeed and scale that business. Like I said before, there's so many different types of business loans. So you can always get, a working capital, a line of credit, an equipment leasing, factoring loan. So knowing and understanding them is extremely important. So You could always reach out to me, and I would love to be able to help you with that. If you come to me, I will give you my advice. There's also, for those real estate investors, there's also so many different types of loans that you could obtain to increase your real estate investments, right? Your portfolio, you could scale that. Like I had said before, if you have free and clear properties and you're looking to buy more property, you could refinance that property. Are you looking to build a brand new real estate portfolio from the ground up? That's a construction loan. Is there a bridge loan that you would need just to cover you for, let's say, 3 to 6 months, because you're working on a project and that project will be done soon, but it's not done yet, and you got a new opportunity that you need to acquire? So there's so many different types of commercial loans. So also, you need to make sure that you understand the situation that you're in with that investment, so that when you get that loan, the investment doesn't become a bad investment. It becomes a great investment. And that is all due to what type of debt are you getting in order to be able to invest in that property. So let's do an overview of all the different types of commercial real estate loans that we have. So the first one we're going to talk about is a new construction loan. So what is a construction loan? A construction loan is that when you have a land and you're going to build from the ground up, there's nothing on this land, and you're going to build a new building, whether it's single family or it is a multifamily. It could be storefront, it could be a storage unit, it could be any kind of construction, as long as the land is vacant and you're going to build on it. That is called construction loan. And there's variable types of construction loans. Sometimes when you're building something new, you are going to build it and then sell it. You will not keep it. That would be strictly a commercial loan. And the terms of those loans usually last the amount of time that your construction is going to take. Now, you can also be building a brand new construction, but you're looking to keep that property to rent it out. So then there's a construction loan that's called construction to perm. And what that means is that they're going to give you a construction loan with certain terms and rates until the building is completed. Once the building is completed, they will turn that loan into a perm loan, which then has better rates and terms. It'll be long term. It'll probably be a 15-year, 20, 30-year, depending on what you choose to obtain. So the next type of loan that we're going to talk about is the 4-unit properties. So a lot of people get confused because they think that this is a multifamily, but anything under 4 units is still considered a single family type of loans, unless you are buying it for investments, and then it's considered a investment loan. But so if you're looking to buy, let's say, a 4-plex, and you want to live in one of them and rent the rest, there's a loan that you're able to obtain that it would be like a first-time home buyer or even a single family loan. So you have to make sure that you understand that, because you could get better rates if you live in it. But let's say that you want to buy a 4-plex just for investments and you're not going to live in it, then that loan is considered more like a commercial loan, because you're not going to live in it and it is completely for investments. But there's still very good loans out there for those type of properties. So the next type of loan that we're going to talk about is multifamily. And like most of you know, that's my favorite type of loan, because Bobby and I are very heavily invested into multifamily. So there's so many different types of loans that you can receive for investing in multifamily. You could get a loan to acquire straight up a multifamily. You could get a refinance on a multifamily. You could get a rehab loan for a multifamily. So there's wide ranges of program out there that you can get depending on the situation that you're in at the moment and what you are looking for to receive from this loan. So make sure that when you are looking for a multifamily loan, that you understand your situation. If you're going to need a short-term loan, a long-term loan, an interest-only loan. So there's a variety of them. So the next type of loan that we're going to talk about is a fix and flip. And this is a very popular loan for real estate investors out there. So you're able to obtain a loan to purchase a property and do the rehab. But the good part about it is that they're very short-term loans. So if you only take 6 months, 12 months, they're able to give you terms depending on the type of rehab that you need for this property and the time that you think you're going to get it sold. So these are not long-term, and they also don't have prepaid penalties on some of these loans. So that's the good thing for all of you investors out there. So the next type of loan that we're going to talk about is SBAs. And there is two different types of SBAs that are good for business owners and for real estate. So the SBA 7A is good for small businesses that are looking to either expand, buy out a partner, do expansion, purchase equipment, and a lot more that you can do with that. The 504 is more for a real estate investor to buy land, to improve a property, to purchase investments. Very big in real estate investors. The only thing with an SBA loan is that it does take a very long time to be able to fund, and they require a lot of documents. But if you're able to fulfill the documents that they require and wait for the time that it takes to fund, these loans are great because they have very favorable rate terms. So the next loan that we're going to talk about is a bridge loan. This is more for investors that are very knowledgeable in the real estate world. This bridge loan is usually given by a private lender. Very short term, very high rates. But the bridge loan is something that is extremely important sometimes to an investor that needs money now and for a short period of time. These are not for an investor that wants a long-term or good rates. So you use these bridge loans to be able to acquire or to have a construction or a rehab that needs to be done right now, and that you know that you'll be able to pay off that loan extremely fast within 3 to 6 months. The next loan that we're going to talk about is hard money loan. What's a hard money loan? A lot of people don't understand that. These are coming from private lenders and individuals that want to lend money out with having a collateral of a real estate asset. So a new investor that wants to buy a rehab property like a fix and flip or a multifamily that doesn't have any kind of rental income, any type of real estate investment that is not meeting the criteria for a lender, a bank, somebody that has more of a square criteria. So you will borrow hard money loan from an individual or a private lender that is willing to give you a money, and this again is a short period because the rates are extremely high, but it gives that investor the opportunity to take on a new investment that cannot wait for a traditional lender. The next one that we're going to talk about is a loan that you obtain to buy a single family home, but as an investment, either to rent or for Airbnb. So these types of loans run very similar to a regular residential mortgage, but because you're not living in it, they consider it a commercial loan. A lot of new investors qualify for these loans because they are new in the property and investment property arena, and they are small single units where the bank feels comfortable to lend them for the first time to invest into real estate.